Good morning and welcome to the World First Weekly Report for today, Thursday the 5th of May. Well, over the last week we've seen economic data come out from the US which represents the fits and starts of an economic recovery. The data out was really a mixed bag. We had data including factory orders and construction data coming out better than expected. However, figures such as GDP and ADP employment change came within estimates. The data that was coming out was in comparison to the equity markets. We're in the full swing dance of the equity markets earnings season, and generally speaking earnings have been performing well over the last week. As a result, we've seen risk appetite put the Aussie in a position where it could touch on $1.10 over the last week. However, with commodity prices going south over the last couple of days, we've seen risk appetite once again come off the table. Going forward, the next 2 weeks and 4 weeks will be key. There are rumours or whispers of a profit take going on. We've got the Fed's stimulus package quantitative easing expiring in June, and with commodity prices falling, there is the potential for equity markets to come off. Should equity markets come off, this is going to hold risk to the Aussie dollar, so the $1.10 level that we've seen recently may not be achievable in the near term. In Australia, the economic data has been relatively good. We had an RBA rate decision on Tuesday, and the RBA decided to keep rates on hold. The Governor Stevens and co noted that they're happy with the commodity-linked and Cyclone Yasi-linked inflation, and given that unemployment remains around the 5% level, they're happy, or they're considering that their monetary policy is appropriate. As a result, the wind behind the sails on the Aussie dollar locally may not be there, and with a lot of global risk via equity markets in the US, you may want to capitalise on spikes on the Aussie dollar in the next couple of weeks. Abroad in the UK, there's been a really poor week of data coming out of the UK, which slightly suggests that their economic recovery is not on track. There was a host of data out, and as a result, the Aussie pound got into the 66 levels. Economic data was scathing of the UK recovery. The data included GDP, house prices and consumer confidence. The usual saving grace figure of manufacturing was also down on expectations, which is usually what props up the UK economy. They had a manufacturing piece which was below expected at 54.6. Going forward, we've got non-farm payroll figures coming out on Friday and other associated unemployment data out of the US in the meantime. There's a significant amount of risk attached to that figure given the ADP employment change came within what was expected earlier in the week, and you may want to capitalise on spikes in the market. If you'd like an update on the market, or if you'd like to book a trade, don't hesitate to get in touch. Enjoy your day.